Hello, since the Algiers conference 10 days ago, oil has rallied almost 15%. We now believe that other risk assets could follow suit. So we will first start with the chart of oil. This is an investor's view, which is a combination of a weekly, a daily, and the hourly chart. The weekly chart, as you can see, is coming to the exhaustion of a downtrend. It was oversold earlier this year and has hence reacted up. Our downside targets are labeled as done, and we are now waiting for this downtrend to reverse. This is already happening on our daily chart, and you can see following a strong leg up between January and May this year, and the consolidation that followed, we're now seeing a breakup to the upside. Possible targets above 53 into the 55 levels over the next few weeks. The risk index is not yet overbought, which gives some leeway for this move to develop. On the hourly chart, or the perspective over the next few weeks, you can see the strong move that we've seen since the Algiers conference, but it doesn't seem quite finished yet, and also here targets towards 53 and possibly up to 55. The risk index is close to overbought, but this looks like an intermediate top for now, and there's probably another one to follow. What's been surprising in this context is that equity markets haven't really followed. This is the hourly chart on the mini S&P futures, and as you could see, following the strong breakdown early September and its recuperation into the third week of September, we have since been in a sideways move. Yet we label this as a correction down, and we believe it has reached its targets in terms of price as well as in terms of time. We are now waiting for it to reposition to the upside for a new period of uptrend into possibly the third to fourth week of October. This is corroborated by the daily or the perspective over the next few months. We've seen an intermediate top in August, a consolidation since, and we believe that our risk index is now positioned to move up again, and that there's still leeway for it to happen over the next month or so. Possible targets above 2200 again, and possibly into the 2250. The weekly chart is supportive. It is still in an uptrend, and although our targets have been reached, we could still see that we are not yet overbought. So there's support here from the weekly chart still. Putting it into perspective, you have a long-term bull, a medium-term bull, and a short-term corrective bear, which calls for a situation where we are working through an intermediate top in what is still an uptrend. Also, with oil moving up, we would have expected the euro to move up too. It is not quite yet the case, yet we believe the situation is constructive. If we look at the longer term chart of the euro dollar, or the weekly chart, or the perspective over the next few quarters, it is still in a downtrend and would still have some potential below 110 and possibly towards parity. Yet the consolidation up that we've been seeing since early 2015 has been lingering on quite massively, and we believe that the longer it does, the more risk there is that it could actually revert to the upside. This is also corroborated by the fact that now our risk index is heavily oversold and seems to be turning. So we are getting very wary about this long-term downtrend. The daily seems to corroborate this. It is already in an uptrend and would have potential up to possibly 115, even 117 over the next few months. It is also in a consolidation here, and we expect it to break up to the upside, and in this context there's still leeway on our risk index, which is not yet overbought. A bit of short-term pressure still on the euro dollar here on an hourly chart. We could see that we are in a downtrend and that it could possibly still be weak towards the 110 level. That said, the risk index is already oversold, which gives the premises of what could be a resume uptrend. Putting it into context, we are still in a bear over the long term, but we believe it's an exhausted bear. We are already in a bull over the medium term, which now needs to confirm that it can accelerate up again. And the hourly is correcting down, but could soon be reaching levels which may be quite interesting. Now, having a quick look at gold, we want to differentiate it from oil. It is a different type of commodity. It's quite defensive, and in this context, we believe that its picture is less promising. We've had a long-term downtrend which reversed late last year into a correction up. The targets for this correction up have been reached, and on our daily, we have started in a correction down. This correction down, which coincides with a movement or a reversal of interest rates, does seem to be on its way to possibly reach to the lower 1200 levels. So we believe there's still risk here over the next few weeks. The hourly has reached initial target, but could still lead us down to 1230. And we can see that although there is an intermediate bottom here, which could trigger a short-term reaction, we're still, with our envelopes, quite in a downtrend. So with a bull, but just a corrective bull over the long term, and two bears over the medium and the short term, we are quite careful on gold at the moment. Last week wouldn't be complete without looking at the cable, which reached new historic lows last week. And looking at the long-term chart, we are slowly getting oversold, but yet our targets could extend down to possibly 120 over the next few quarters. So although the situation is quite exaggeration, we believe it's too early to call for an end of this downtrend. On the daily chart, we are also quite exhausted. We have reached our targets. We are hitting our smaller envelope is hitting our larger one, sense of market stress. Yet the risk index is just entering oversold, so it could have a bit more to go. So also here, it's a bit too early for us to call for the end of this move. On the hourly chart, also a downtrend, quite oversold. Our envelopes have touched each other. Prices have gone through the envelopes. We could expect a short-term reaction. But yet again, in the context of the daily and the weekly just mentioned, we believe it's too early to start buying cable again. We wish you a very good week. Thank you very much.